Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
I'm glad to hear it. You look like you're on the road again.
I am. So, yeah, last week I was in London for LME week, then was on a nickel panel at the U.S. Stainless Steel Conference hosted by SMR. And then this week I am at the Stainless Ferroalloy Conference hosted by CRU. So on a panel as well, talking nickel later this morning.
Well, okay. Well, let's get into maybe some of the key takeaways from the certainly last week. But first, we better start with the kind of news of the market. You know, some people might be worried the nickel price has gone down again.
Yes,
but we called it, didn't we? We called it. We did.
We did. Yeah, it took a little longer to get there, but since the beginning of the year, we said that nickel needed to break down below 20,000. We got it several weeks ago, and as expected, it's now trading, after being above 20,000 a ton for a while, it's now settling into a 18 to 19,000 ton range. And we've had a few more thousand tons of nickel show up on the LME. Again, over the next 6 to 8 weeks, I do expect us to go down to 17,500, test support at that level. We should see another 10 to 20,000 tons of nickel come into the LME, maybe even a little more than that. But again, not worried about it. As we get to year end, you're going to see EV demand reaccelerate. We've seen stainless steel production, rebound quite strongly. We're going to end 2023. It is 2023. With about 9 to 10% nickel demand growth. Again, despite massive interest rate increases, despite all the troubles in China, despite not quite as robust sales in the EV market, we're still seeing these kind of growth rates, which are double what most analysts have. So yeah, no worries. We're going to have a little sell-off into year end, and then we'll bounce back as the year ends, and then heading into the first part of 2024.
Okay, so not wanting to over-egg this, okay, we have been calling this for months. It is not a surprise to anyone listening to this show, or shouldn't be, because we've been signposting it right out of the gate. However, there are people that point to factors like China GDP, like Indonesia about to ramp up and produce more nickel than the world could possibly consume, and other sort of kind of rash, broad, generic statements. So can we just address that? You referenced China in there. So why is this inventory that's coming into market now? Why is that not going to continue and sustain? Why is Indonesia not going to drown the market with nickel?
So we talked extensively last week around this this in-process inventory gap that people are seeing counting these surpluses because they're failing to account for the fact that as you build out a new supply chain, you need in-process inventory all the way through, and there's a precursor cathode battery steps before you get to a battery, a battery going into a car. And so there's a substantial amount of in-process inventory that'll never come out, right? It's just what it needs to feed, what needs to be there to make that supply chain work. And so, we are in surplus, and some of that metal is going to hit the LME this week. But again, it's the underlying demand growth. There was no analyst out there who had 9 to 10% growth for the first 3 years of this decade in 2020. And again, we're just getting into the nickel heavy demand growth in the EV sector. China, Europe, small cars, small distances, lithium iron phosphate, 100% fine for those applications. We're now, Rho Motion just released their September 2023 sales. And again, globally, not huge numbers, 23% growth year over year. But the key thing there is you had China up 33, EU and UK up 27, but the US and Canada up 60. All of 80 to 90% of all those EV sales in Canada and the US are going to be for big cars and trucks, and they're all going to be nickel batteries. So the sort of the average amount of nickel per EV is going to increase as we shift more of the global growth into the more nickel heavy markets. And again, the analysts aren't really accounting for that properly. So yes, we will see lots of supply from Indonesia, but it will be met with also very robust demand growth going forward.
Right, and demand growth from both stainless steel and EV. You kind of covered the EV bit. Stainless steel, let's talk about that China factor. If they're not building as much, is that going to cause a problem?
Well, again, we've seen double, like it's high, well, into the mid-teens stainless production growth year over year now in China. Rest of the world has come off a little bit, but again, stainless steel is a high growth metal. It's not just China dependent. It's a wonderful high strength to weight material that's highly recyclable, and it can underlying demand continues to grow, and again, we're seeing that happen, and it has a very wide range of uses, which help underpin that demand story. So not expecting that to slow down anytime soon.
Okay, so and just let's talk about a phrase we've talked about a few times, which is about this great convergence, sulfate and briquettes, etc. So again, what impact is that having?
Yeah, so as we've been saying, for 12 months now, as these nickel refineries in Indonesia and China ramp up, we are going to see LME prices be relatively lower relative to where they would have otherwise been. But the massive discounts that we've seen in nickel pig iron and matte and so forth, will continue to compress, as we go into the rest of the year. Sulfate's back actually to about par with briquettes. Part of that's briquettes price trading at a discount to the LME price, but also an improvement in sulfate prices. NPI discounts, they're still sizable, but they're shrinking. And again, as the next 6 to 12 months wears on into 2024, we should see that largely disappear, by the end of next year.
Okay, and I'm going to bring up something that again we've talked about in numerous times, but because I think I got trolled slightly on Twitter by someone talking about type 1, type 2, and I'm like,
oh, jeez,
I know, but they're a research firm. So my response was, we don't talk about that anymore because it's not as relevant, but I appreciate your report, was kind of the gist of it.
There we go.
But it just shows you that not everyone out there in the market reports to know about it as a space is into the weeds like we have been for the last 3.5 years, Mark. So just why give us the type 1, type 2 discussion, and where you can park it up, and maybe even just touch upon matte as well while you're there.
Sure. So about 5 years ago, sort of people flagged the fact that most of the production coming from Indonesia was what's called Class 2. So it's not LME deliverable, and it's used to make stainless steel and various alloys. They saw this basically two-tier market, and basically had declared that no laterite ore could ever make its way into the Class 1 market, completely ignoring the reality that Inco for 50 years supplies matte derived from laterite ore that goes to Sumitomo Metal Mining, who makes the world's best nickel and high purity nickel and cobalt products. And so that whole Class 1, Class 2, it was a short-term thing. You needed capacity, you needed a way to be able to move those nickel units between those markets. It was only going to be a matter of time for that to happen. Matte was the process to be able to do it. And we've seen that happen. And so, again, over the next 12 months, the ability and need to talk about Class 1, Class 2 will disappear. Again, what people should be focused on is just the net overall availability of nickel units, and more looking at, okay, what's available for Western consumers who don't want to buy high carbon Chinese controlled nickel versus high carbon Chinese controlled nickel. It's, to me, the more important market bifurcation going forward.
Okay, so it's just a little reminder. We can look back and we can look at all the various conversations. I think there's articles off the back of most of those conversations. So we've covered it, guys. We've covered it. Okay. Yep. Now I want to talk about LME Week now, and then the significance of it and the importance of it. You were there. What did you take away from it?
Yeah, so I always like to go, because in 1 week period there you get to talk to producers, consumers, and traders all in the same time period. And even if you have good relationship with people, everybody talks their book a little bit. And so with all three groups, you can kind of triangulate where the market's sitting. So, as we just talked about, that it wasn't reinforced with the discussions that we're having is, yet, there's a lot of in-process inventory that's not really being accounted for properly in the supply demand. So the nickel surplus isn't as large as it appears. I would say the big new takeaway, I'd kind of not, always believe this. And again, why I'm not so worried about Indonesian HPAL capacity ramping up, because it'll have a far bigger impact on the cobalt market before it has an impact on the nickel market. And the cobalt revenues are an important part of the overall economics of making those HPAL projects work. And so, again, talking to people during the past week is, just how big a surplus there is in the cobalt market already. You've got several large Chinese projects in the Congo coming online that are going to add substantial capacity. And you're going to see, again, all this HPAL growth that we're talking about on the nickel side. Indonesia is also going to deliver a huge amount of cobalt units into the market. So, I really think we'll see single-digit cobalt prices, for several years to come. And it'll be interesting to see sort of how that all shakes out going forward, because there's almost no primary production. It's all byproduct production. And so, the prices can drop a long way before people will actually turn off some of that production. Glencore's already signaled they'll take a few mines offline, but the surplus might be bigger than Glencore's ability to kind of manage that market.
And talk to us about, the growth in the United States is going to come from where, do you feel?
It's two sources. So, a big part of the U.S. Stainless and alloy business is aerospace. You've got Boeing there, and so. And you've got all of the military equipment providers, and there are a few wars going on now around the world. So between the basically coming out of COVID and rebound in ramping up aircraft production again, obviously much more spending on military going forward, and then the other big driver is onshoring in terms of stuff coming into the U.S. market. It started to show up. But the feeling in the room last week is that, they're going to see more of that coming through, into the U.S. market going forward. So, again, the market needs a little more, the U.S. could handle some more melt shop capacity, and not sure where it's going to come from at this point in time.
So melt shop is what?
Where you melt stainless steel. So you melt product to make stainless steel. So it's referred to as a melt shop.
And that, how much of the market is that? Because I don't know how many of those there are.
Oh, it's 2/3 of the global nickel market.
Wow. Okay. Yeah. Oh,
and most melt shops in the West use scrap as feed. So there's a lot of nickel units that are coming scrap that we don't even talk about, because it's just scrap that gets recycled. So.
And is there kind of seasonality to that? Because you got to build up a inventory and then, I guess, melt it. Is that a seasonal thing?
No. In the North America and the West, it goes along. In Europe, you have a slowdown in the summertime, just with August. But generally, no. There's a little bit of seasonality, but not tons.
Interesting. Okay. Well, we better talk about a little bit of company use. We'll start with Nickel Industries. They've been acquisitive recently, haven't they?
Yeah. So again, Nickel Industries is an Aussie listed company. It effectively gives you public market exposure to what Tsingshan's going on. They have projects that are basically built and operated by Tsingshan, which they have an ownership interest in. And so the latest one in their portfolio is buying 55% of the Excelsior Nickel project, which is an HPAL project. They're going to target low carbon footprint to make most HPAL operations burn sulfur to make the sulfuric acid that they need, and that does contribute to some of the power requirement. And they're also putting it in a 200 megawatt solar farm to help reduce the carbon footprint further of the power they need. Again, HPAL is much less power intensive than NPI and MAT, so they should be able to get towards relatively lower footprint. It's 72,000 tons. The other unique part about it, again, they're going downstream into being able to make either mixed hydroxide, which is your typical HPAL project, nickel sulfate, by taking that MHP one step further, and then nickel cathode as well as all part of that project. So it'll be the first project that can produce all three of those products out of a single facility. The thing that's great about Nickel Industries is it does, it's really the only public market view into what the operating costs are for Tsingshan's operations and similar operations in Indonesia. Gives you a view on ore grades because they operate some mines as well that feed some of their plants, and now we'll have a similar public market view on the HPAL operations that are there. So, good for them to keep going. I wish I had come up with that idea, because it'd be great to have Tsingshan build and operate things for you, and then you get to be CEO and make lots of money. So it's good.
Yeah. Always thinking ahead. Well, HPAL is getting quite topical at the moment. Obviously, we spoke last week about Horizonte minerals, trails and travails, I should say. With HPAL, It is complex. I guess Tsingshan are the experts. So other company news, SPC Nickel.
Yep. So we've talked about them before. Again, they did a great job pulling the other half of a deposit that they own. The other half was owned by Vale, consolidated. And so they just completed the second phase of drilling, another 8,800 meters across 40 holes. The interesting piece here is this is one of the few open pitable nickel deposits globally where you can ship to a mill. They've got 2 mills in the region. I think they have to ship it to the Vale mill as part of the deal, but I'm not sure. Again, they got pretty solid results all the way through the program. So it'll be good to see, how that resource shapes up. It's just trading very, very cheaply. So if you want a good call option on nickel, something to take a look at too. And again, run by a very good exploration team. The other thing, other news was in our neighborhood. Aston Minerals have had multiple drill holes released just after we last talked a couple weeks ago. And again, they've got a second target within the structures that hosted their first deposit. And again, getting Crawford-like grades at this, what they call their B2 prospect, and extended, the strike length there by 500 meters. Good thing is that stock has sold off over the last couple of months, with the, in line with the rest of the way the other nickel stocks have traded. And you've seen, the good thing is there, you've seen some of the insiders, founders, adding to their position right now, which is great. So
all good. And last but not least, you obviously put out a feasibility study last week, and how's that been received?
Yeah, it was a big week for us last week. Very happy with the results. We talked just on the Canada Nickel. So, 2.5 billion NPV, 17% IRR, pops up to over 18% when you include the carbon capture and tax credits and storage tax credits that we expect. Second largest nickel reserve now, second largest resource according to the Woodmac data. It's a 41-year project life. We'll be the only chromium producer in North America. And we look at the metrics, we'll have almost 50,000 tons of nickel over a 27-year peak period. During that time frame, over $500 million per year free cash flow and $800 million EBITDA. So again, that kind of scale asset that the majors would want to look for. And on the carbon capture and storage side, we were targeting 1 million tons. We actually were able to show that we could store 1.5 million tons of CO2 per year, which would make us one of the largest carbon storage facilities in North America. Net, when you look at our footprint, which on a gross CO2 per ton of nickel would be about 5, net equivalent would be just over 3. We'll have a net negative footprint of about 30 tons of CO2 per ton of nickel, in terms of making that happen. So endless reports have all been very positive. Investor feedback's been great. Again, this is a horrible market. We're in one of those markets right now where, basically any news creates any liquidity, creates a selling opportunity for, people to sell into. So, we've had a bit of that, but, the feedback's been good. We'll be out marketing over the next few weeks, and, we're on track to get one of those offtake agreements in place by year end, which we think will transform the story.
Well, tell me why that transforms the story. What's an offtake agreement going to do for you?
Well, again, the way we're structuring it is basically, it's not, people have signed offtake agreements, but there's no cash and not very few strings attached to it. This one, the way we structured it with the groups we're talking to is they have to write a check on signing, and they have to write an even bigger check on a construction decision. And so, what it does is a lot of North American investors are not familiar with nickel, and, sort of the quick dirty is, I want to look at nickel. Indonesia's going to flood the market. Why do I need to own anything in nickel? And so they just, go back, when you see, one of the battery supply chain step up and say, we are going to put money in a project in North America because we want to see that nickel come to market. I think that then makes it easier for a lot of investors, fund managers who've been on the sidelines, to finally start to get into the story, I think, we re-rate it pretty dramatically is what we're hoping at that point. So.
Right. Okay. So they'll come in with money, having done diligence, not just on you, but what their expectations are around supply into the market. No one's going to throw tens of millions of bucks around casually. But again, how much work and what type of strategic would be ideal for a company like you? And more importantly, I guess, is in terms of the type of strategic will to determine how people perceive your ability to actually deliver against that? Because, there's smart money and there's dumb money. There's, people who put money into something with an expectation it will go well without knowing too much. A strategic industry partner is important to you because, again, just tell me what it is that they've done to that up until that point.
Yeah, because one, again, these are conversations that have happened over a 2-year period. So number one, it's the battery supply chain saying we need nickel projects in North America, and we're ready to write checks to make that happen. Number one. Number two is in terms of the amount of nickel that they need. Again, signals to the market. As I've said, other people that we've talked to said they're going to need more nickel in 2030 than the United States consumes in total today, which again, I don't think people really understand, just how much nickel is going to be required in North America and Europe to build all the EVs that we want to build. Number two, having a battery supply chain partner allows us, to go to the various government levels, whether it's federal, provincial, and the US. We as Canada Nickel, will be eligible for a range of programs. Us as Canada Nickel with battery supply chain partner who's just invested $5 billion in building a cathode plant, battery plant, precursor plant, or retooling a car plant, will be a much stronger thing to get as much of the government, funding packages that we've seen in Canada for some of the other battery supply chain things. So, it's helpful on multiple fronts, and again, we'll be working with them, to be able to focus on the downstream conversion into products that they need. Because again, in addition to just the mining, we also need the downstream conversion to be able to make materials that can get into the battery supply chain. And the stainless steel market.
Okay, so great. They've done a lot of work on you in terms of the diligence, etc. But I want to talk to you about some things that are being talked about on the boards and social media, which is around your recovery rates. We talked last week about hitting 41%, but we've seen various numbers. Where are we? Where are you with that, and why do the numbers change?
Yeah, so the key piece here with these deposits, they're always sort of between 40 and 50% life of mine. We said it very clearly in our investor presentations, we were targeting a 4 to 5 percentage point improvement from the PEA to the feasibility study. Some people, we put out one of our first local cycle tests about 2 years ago. We were at that point, still thought we might start on a smaller scale at 42,000 tons. We've increased that rate. And for us to start mining, we've actually had to mine in an area to be able to get materials to help build the plant that isn't necessarily the highest grade material. So, what we processed through there was a higher grade sample than, where we ended up. The key thing to focus is on that same release, we said we made a 19 percentage point improvement in terms of the flow sheet that we're using in the feasibility study versus what we used in the PEA. We put a table in the feasibility study release, and we specifically did this to highlight to people. So we processed 900 million tons in the PEA. We got 37% recovery. We processed in first phase 1 and 2, it's over 1 billion tons, so more tons at about the same grade as we had in the PEA, and we got 46%. So we got a 23% improvement, which was better than we had talked about in the 19%. The other piece is there's been some talk about pilot plant recoveries and why didn't we talked about the iron and chrome, but we didn't talk about the nickel. Again, it's this fixation on a single number. We picked pilot plant samples because we needed to produce lots of concentrate to be able to do, to be able to do some downstream process testing that we wanted to do. They're not they are representative of the different ore types because we needed to confirm that we could process the different ore types. We achieved what we wanted to do on that. But, if we publish the numbers, people again would read through and say, the kind of thing that people have latched on to 62. If we put those numbers on a pilot plant, people would get sort of misconstrue it. All of the data from the open cycle tests, all of the data from the log cycle tests, all of the data in the pilot plant, all got incorporated into a set of recovery equations. Again, we need to do that because the recovery across the ore body varies from 20 to 60%. We talked about that in some of the early news releases on this project. We work with Ausenco, who in terms of mineral processing, are one of the world's best companies on that. They're going to be signing off on all that. So again, any concerns, nervousness about recovery and so forth is just absolute nonsense. So, I just want to put a nail in that and allay any people's fears, on that front. We were very happy with the 4% overall, very happy that we got 9 percentage points more, 23% more across the first billion tons. But again, when you make recovery improvements, guess what? Stuff that maybe was only 15% recovery and didn't make cutoff last time, now we're mining that low grade material, towards the end of the mine life, and it's bringing the overall average down to 41%. So that's the
okay. Understood. Okay, well, I hopefully that addresses some concerns or some inquisitive minds. We'll learn something from that. Mark, appreciate it. You're obviously over there in Orlando, heading into that conference. Again, is it pretty much like LME, but the North American version?
Not so much LME, very focused. LME is basically a whole range of various metals. This is a ferroalloys conference, so it's all about stainless steel alloys and high nickel alloys and various alloys of different shapes and forms. So,
well, I hope you're excited.
I am
not
actually.
Sure I would understand what the heck was going on there.
Yeah, sadly, I am. Yeah, so
go have some fun. And good luck with that. We'll see you next week. Okay.
Yeah. Thanks, Matt.
Cheers. Bye.